We talked about that Dollar Gen a couple weeks ago. We said, it's pricey. You're probably going to fast fire me. Remember we used to do a thing called fast fire?
That's right.
I said, but Dollar Gen and earnings looks pretty good. And Dan totally, what's the word we use? Eviscerated me.
Yeah.
Thank you, Melms. But this was an old power pitch as well. And you know what? It's still not expensive at 21 times forward earnings. So although the stock has been on fire and seemingly impervious to the tape, I think you got to stay with this name.
I think today's price action in this and Walmart and Target, and, over the last couple of weeks is telling you something kind of interesting. When you look at Williams-Sonoma, you just mentioned Tiffany's, Tapestry, Capri, there's a bifurcation going on in retail. And then it's not just even the crappy names, because we know the Kohl's and the Macy's and all that stuff. That's a separate thing. That's a structural issue. So what I would think about as we go into the holiday season and back to school, then the holiday season is how much of this trade war is going to impact the ability for companies or retailers to discount during the holiday season. We know that's been a huge factor in the retail sales in Q4. So to me, I don't think this sets up as bullish. I don't look at Dollar General making new highs and blowing out like this and saying, oh, you want to buy retail stocks into Q4.
I think, a lot of these names, Dan talked about Kohl's and Macy's, but I look at Kohl's going into Christmas, and they have that JV with Amazon, and there's been so much bad news. Just for a contrarian play, I'd like to think about Kohl's going into Christmas, because I think so much of the negativity, but it's not my favorite retail name. I mean, one of my favorites is Costco still, even with the latest pop. But Kohl's is a contrarian bet. I think is very attractive for people who want to play in that segment.